The difference between winning and losing is most often not quitting. Walt Disney. Think about Walt Disney. The man was a cartoonist, but has had an enduring impact upon the entire world, starting off with drawing cartoons of Steamboat Mickey. And he had a dream, and he continued to work toward that. If your dream is learning how to read stock charts, how to make money in the market, stick with us. We're not a stock calling service. We are an education firm every day, 10 to 15 minutes. That's all we ask. I'm going to jump into these charts. For those of you who are interested in oil, Bitcoin, and real estate, we'll deal with those ETFs at the end of the program. Plus, I'm going to start every day taking one of the questions that you guys email me and answering that. cw@chartingwealth.com. I've got one from Paulo today that I'm going to deal with. You want yours to be read out? Want me to try to answer it for you? Be happy to do so. If all you're interested in are the ETFs, the first four, that is the S&P 500, NASDAQ 100, 20-year bonds, and gold, we'll just do that in that order. So let's jump into these charts. First, we see stocks and gold down for the day. Gold down not as much, not nearly as much as stocks, a little less than 0.5%. Stocks down big. Bonds, of course, up big, as it should be. So let's look at what we have happening. We look at the S&P 500. What do we see here? We see a green up candle forming. Price percent oscillator still negative. It is heading up. Derivative oscillator losing downward momentum. We have a green candle forming with a wick on top. But again, nowhere near making up that last big down week. Well, the big solid red down candle. Trying to move up though. We'll see how that continues to move forward. Look at the 2-day chart. Now remember, this latest 2-day candle has finished drawing. It represents Tuesday and Wednesday of this week. Higher high, green up candle, Heikin Ashi candlestick still looking pretty good. Price percent oscillator still heading up. Derivative oscillator heading up, even though it was a down day, 2.13%. Now we go to the 4-hour chart. This is where you see it down in the morning and a little much the same in the afternoon. 4-hour chart still hasn't crossed over going down. Don't really know what's going on other than maybe some absorption of some gains. We'll continue to watch, wait, and see how this sorts out. For those of you who thought it was just going to go up forever again, we're going to have some birth pains. And at some point, that bull trap is going to pop and the market's going to rocket over going down. When is that going to be? Can't tell you. Don't know how long that's going to take. You look at past market cycles, there's always a bull trap, but no one can tell you actually when it's going to spring. However, second rounds of layoffs, a lot of middle managers in corporate America are now getting the notice. They're being fired, let go. The tremors in the economy will continue to keep knocking out the supports until, regardless of how much inflation and how much money the Feds dump in the markets and how much the powers that be want to inflate and drive the market up, at some point, it'll all roll over again. So just be ready. Pay attention to the weekly trends and, of course, the 2-day recrosses, because then again, when this starts getting weak, the first thing that's going to cross over is going to be a recross going down. If the weekly's still in a confirmed down move, that recross will be our real measure to jump back in on a down trade for our practice trades with something like SH or just buying a put. Again, we are not talking about real puts. We're talking about virtual trading. We're not a stock calling service. Not going to get into that. Okay, what do we see on the Qs? Well, we see the NASDAQ 100 moving up. We see the price percent oscillator still negative. We see the weekly candle accelerating upward, even though it was a down day. NASDAQ was down 1.15%. We go to the 2-day chart. What do we see there? We see again a strong 2-day up candle, derivative oscillator gaining upward momentum, price percent oscillator heading up. Price is sitting right there on that 50-period moving average. Will that be potentially some type of ceiling? Don't know. Don't have any reason to believe it will be, but that's where things are right now. We look at the 4-hour chart. We can see where the 200 period moving average was pierced and then dropped below and is right there on it. Price percent oscillator's flat, derivative oscillator losing upward momentum. So we'll watch and see. Again, that 2-day chart is going to have to recross over going down before we jump into any down move. That's where we are as we end the day on Wednesday with stocks. Next, we go to bonds. What do we see bonds doing? Well, we still have an up price percent oscillator, derivative oscillator still losing momentum, but positive. Green spinning top for the week, indecision tending up. So again, bonds did rocket up today, 2.65%. We look at the 2-day. Now, it is flat on the price percent oscillator, just crossed over on Monday going down. If we have a recross before the end of the week, that would be nice, wouldn't it? If we saw Thursday and Friday up, and at the end of the day on Friday, bonds were crossing back over going up, we had a recross on the 2-day, I'd like that. We'll see just how things shake out. Derivative oscillator still barely negative. Price percent oscillator, as I said, flat. We go to the 4-hour chart. What do we see there? It's trying to cross over going up. Didn't happen. We saw that the price percent oscillator is moving up, getting close to crossing. Derivative oscillator flipped over positive. And we see 2 up candles throughout the course of the day, reaching a little bit of a higher high in the afternoon. Not much, but 2 nice sized green up candles blew through the down 2-day trend line. And the 4-hour blew both those out in the morning on Wednesday. So that's good to see. That's where we are on bonds, hoping that we might have a recross sometime soon that will allow us to get into an up move on bonds. Now we go to gold. Remember, we had that weekly vertical crossover at the end of this last week on Thursday the 9th. Things were closed on Friday the 10th for Good Friday. We have a big green up candle still forming, even though a bit of a loss, less than 0.5% on Wednesday. Price percent oscillator still strong going up. That derivative oscillator still troublesome. It's still negative, losing downward momentum. Go to the 2-day chart. What do we see there? We see that 2-day chart again just moving like stairs up, well above the 2-day trend line. Price percent oscillator heading up. Derivative oscillator gaining upward momentum. So we see things in gold continuing to move up. And on this down day on the 4-hour chart, that's where we talked about this yesterday, some weakness at the end of the day, and we see things sliding sideways and down a little bit. So keep your eye on things. There hasn't been a crossover going down on the 4-hour chart yet. We'll see how things continue to work. We had a good jumping in point last Thursday and even on Monday morning around 10:30. So again, don't want to lose that gain, but don't want to jump out prematurely either. Keep your eye on gold. That's where we are, folks, as we end the day. For all of you who are just out there interested in the 4 main charts that we cover, you can go now. For the rest of you who are interested in oil, Bitcoin, and real estate, we'll jump into that. Real estate, my friends, let's go to oil first. Oil, down day, 4.66%. Look at that. Now remember, the lowest low so far in oil, 399 somewhere along the way. I think that was the lowest I was able to catch. Not sure. There it is. All the way back on Monday the 30th. Then oil popped up. I tell you what, let's look at the weekly chart. This is so much easier. Okay, there we go. If we look at the weekly chart first, we see where oil is again testing those lows. So we'll continue to keep an eye on oil. Price percent oscillator heading down, derivative oscillator losing momentum. We got a big red down candle forming. After those 2 prior weeks of solid green candles, that just means slowdowns in the go down. Doesn't mean it's not like a green up candle. Now on the 2-day chart, looked like it was trying to cross over oil was. And of course, oil has since rolled back over. Still negative on the price percent oscillator, derivative oscillator still positive. And lastly, on the 4-hour chart, down in the morning, a little bit of a slowdown in that in the afternoon, but oil is just suffering. So That's where it is. There's no demand. The economies are shut down across the world. Stable supply. What do you expect? So again, keep your eye on oil. Who knows how low it will go? Will it plumb back down to the $3.99 mark on oil? May. We'll continue to watch, see what there is to see. Okay, let's go from oil to Bitcoin. Bitcoin down for the day 2.49%. Just can't get anywhere, can it? Price percent oscillator still rocketing down. Derivative oscillator negative. Red down candle forming for the week on Bitcoin. Go to the 2-day chart. It has slowly crossed over. That's from those 6 days of up movement. And then we've sort of seen it slide sideways. That was enough momentum to kick the price percent oscillator over positive and the derivative oscillator, but it's hardly separating away from the red signal line. Again, like I said, Bitcoin down for the day. What do we see on the 4-hour chart? Up a little in the morning, then down in the afternoon. Again, Bitcoin sucking wind, just not being able to get any energy for consistent and sustained move up. That's where we are when it comes to Bitcoin. Trying to go back to that weekly chart. There we go. And again, you can just see where it dropped off, just a hammer down on that, and just can't seem to get any legs to recover at this point. Lastly, we go to real estate. What's real estate showing us? Well, tried to start moving up this week. Price percent oscillator is just dead flat. Derivative oscillator losing some downward momentum. Reached a higher high the prior week at 79.99. And of course, so far this week, 78.61. And of course, started at around $100, a high of 99.72 before those 4 weeks of just hammering down, trying to recover a little bit, but again, down for the day. Almost 4% on Wednesday. That 2-day chart crossed over back on the 2-day candle ending the 9th last Thursday, and it's really just slid sideways since then. 4-hour chart shows you it looks like it's trying to go crossing over down, but things really peaked, like we said, last Thursday in the morning, and have just slid sideways and down since then. Just can't get any legs. Folks, what do you think is going to be the answer as time moves on with oil? Don't really know how to tell you about Bitcoin. We can just follow it. But as far as we theorize about what's going to happen with real estate, what's real estate worth when nobody's buying it? Nobody has any money. Nobody has a job. Not a lot. So we'll just see how low will it actually go. It's really quite scary. Okay, let's jump into Paulo's question. He thanks me for all the stuff that we have been doing over the years, wants to know he's an investor and is interested, has been following us consistently for 3 years, every single day. God bless you, Paulo. And the question you have for me is, am I a trader too, or do I use all my equity as an investor? Or actually he's asking the opposite. Are you an investor too, or do you also use all your equity as a trader? And my answer to Paulo was, I look at myself as an investor who trades. I stay very liquid and use my knowledge of the charts to make my decisions. My focus is buying low and selling high, of course. It's easier to do with the ETFs we follow. Caveat, you must have the charting skills first. My friends, liquidity is always the key, I say. If you are tied up in things that aren't liquid, it makes it so much harder for you to successfully practice trade. And again, I keep everything I tell you cloaked in this idea of practice trading. I am not a financial advisor. I will not give financial trading advice, but I will tell you what I do and what has worked for me. Doesn't mean it'll work for you, but my experience has been liquidity is the key. Liquidity is the key in my assets, and liquidity is also the key in the decisions that I make. I would never purchase anything in a practice trade that's not liquid. Why? Because the minute you step in, you have the potential of gigantic losses just to get out. That's why I always talk about the bid-ask being very close in price. Shows you how liquid something is. If you go buy a house, the bid and the ask are probably not that close in price, and it's hard to get out. Or the better example is go buy a brand new car. drive it off the lot, and then go back and try to get the dealership to purchase it back from you, you've probably lost thousands or tens of thousands of dollars. Not a liquid asset. Now, something like SPY, QQQ, TLT, GLD, those are pennies apart every day from the bid and the ask. They're very liquid. So if you do make a bad decision and things start going against you, it's very inexpensive to get out. And in fact, in today's world where you don't even have fees for your trades, it's even more beautiful. I mean, fees used to be really expensive. It would be something that have to be added into the calculation. So it makes it much, much easier to be liquid. Liquidity is such a key. And if you use your knowledge of the charts, can follow a chart, can follow weekly vertical crossovers, 2-day recrosses, all the stuff we talk about, man, it just makes your life so much simpler, particularly those weekly vertical crossovers. Whenever I see people, had somebody over the last few days post a comment, oh, it's going to be a long time till things cross over going up on your weekly chart, and it keeps me out of getting into stocks. Well, probably a good thing. If you were practice trading it yesterday, bought in thinking it was going to go up and got hammered down today and lost 1 to 2.5%, not so pretty. That's why we use those weekly vertical crossovers. They work so well for us. If you guys want to know more about what we do and you want to support the channel, buy the book, Charting Your Way to Wealth. I have an autographed copy ready for you. Also, Patreon supporters, thank you so much. Those of you who want to help us out, $1 a day, $30 a month. You get all the benefits of Patreon membership, including that monthly special call-in where we take your questions, live question and answer session, special training for you guys, plus all the special trainings we have on the Bitcoin training, the short chart training, the long chart training. All of it is there for you. Check it out in the show notes, the link to purchase the book and to be a Patreon supporter. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.